to Fridays. Thank God it's Friday. Oh, it's so early here in London. Well, it's not that early, but it's early for me. We have on Friday open day with our hedge fund clients, so we'll be spending from 10 o'clock this morning right through to about 6 o'clock tonight working with them. It's always a good fun day, pretty tiring, but looking forward to it. Always some interesting topics come up regarding the markets as well, so plenty of brainstorming going on, although my brain doesn't really storm anymore. It sort of just clugs and clunks forward. Anyway, enough of that nonsense. S&P futures 60-minute chart. Last few days we've been discussing the trade we took on the retracement to 1104.5, and we got it, and we had used a 5-point stop, and we closed half at 1099.5, and then we were saying, you know, maybe you might consider bumping up your order to close the second third. We didn't, and we got filled at 1094.5. Now, whatever way you played it from here, I'm okay with. You know, you can trail your stop down to below the 21-hour exponential moving average, which is the light blue line here, and you'd have been stopped at around there, which would have given you on the final third 1098ish. So it'd have given you you would have had +5, +10, +6.5. So not a bad trade. Or some of you leave your stop back up at, just moved it down when you hit your second target to entry point, which is 1104.5, and you stopped out there. Again, both ways are fine. You would have got +5, +10 scratch. It's a personal thing. I mean, you know, once you broke down below the trend line here on the 60-minute chart, you would have thought there was a decent chance to get some downside action going, but it was an incredible, well, okay, it wasn't incredible, but it was a big recovery from the S&Ps. Just look on the daily chart, get the right stock up. You can see again, came up, probed this time, the 50% retracement level, couldn't get through. Let's just move the fibs now. You can see here we're forming a pretty nice cup and handle formation. So, you know, the break above the highs of the handle at 11.12. I think it was actually, we've had a higher high than that, haven't we? 11.12 and 3/4, 11.12 and 3/4, right? You know, so yeah, a break above. Let me just show you what I mean there. There's your cup, and there's your handle. It's considered a bullish formation. Just be a little bit cautious though. You know, we've got this sort of yin and yang going, like that, yin and yang, very oriental, very spiritual, going on in the markets here. So just, I would wait for a break above here before you look to get long. But certainly, you know, held on there well yesterday. Looked like it was ready to roll, rock and roll. Okay, everyone, just going to be a quicker than normal newsletter because we got a busy day today. I look forward to speaking with you next week. Have a great weekend, everyone. Try and relax. Oh God, I hate it. So I shouldn't have said that. I hate when people say that to me when I'm, you know, concerned about something. Yeah, relax. It's okay. Yeah, easy for you to say. Okay, everyone. Look forward to speaking with you again next week. Till then, happy trading.